Welcome to today's trading session. Today is 19th of March, the Wednesday, but nearing towards the end of the month of March, and we have seen a very sharp sell-off in the market since the peaks in the September of 2024, and we are like 6 months from there onwards, and we kind of see some small pullbacks in the market, but nothing drastically has changed. Valuations have come down and become more attractive, but vis-a-vis compared to the emerging markets elsewhere, the other countries in the emerging market sphere, the valuations are still slightly at a premium of around 5 to 10%. So most of the experts feel that the markets are near bottom, they kind of bottomed out, and the downside from here is kind of minimal. But in terms of time correction, there's no consensus that there'll be a particular time frame where the rebound will happen, or even that there'll be sustained resumption in the bull market. So, for all likelihood, the consensus, the broader consensus is there's going to remain a sideways market with kind of few pullbacks, relief rallies, but more or less it's going to be sideways and probably even slight negative returns as well over a period of a medium term of around next year or so. So we don't know how the market will play out, but a lot of people say that there's not going to be the bull market rally that we had seen in the preceding 3 to 5 years. That's not going to happen, is what the broader consensus says. With that in mind, let's see how our portfolio is holding up that we have been building up for the course of the previous 2 months or so since the mid of the January month. So today we see that the index has moved up by about 0.31% and is trading around 22,900 mark. So it's kind of the average value of our overall portfolio that is constructed. It's around 22,900 mark. But let's see what has been our portfolio's performance today and where it is relatively. So let's go to the portfolio section in my account, and there it is. So we see that our portfolio has grown by about 2%. Our portfolio has grown by about 2,300 today, or an increment of 1.37% versus just a 0.31% increase in the Nifty 50 index. So it's like 4 times more than the increase in the index itself. And that's because a good part of our portfolio is constructed using the mid caps and the small caps as well. And even in the large caps, we have a lot of these value stocks, not just the blue chip companies, but also value companies as well. And overall portfolio value stands at around 1.72 lakhs versus 1.68 lakhs that is invested, or accumulative net change of around 2.1 percentage points, which means we just exceeded the average portfolio value that happened either yesterday or today, around the end of March. So it took us about 2 months from the date of commencing the portfolio construction and pretty much into the sixth month from the peak from where the index started falling. But it's not to say that the worst is behind us. It may still bring us some jolts in the next few weeks, in the next couple of months, or a quarter or so. That's what most of the analysts kind of agree. That being said, let's dwell deeper into our constituents, the constituents of our portfolio, and see what they are. And I just filter the constituents by total amount invested. We'll see the constituent, the highest investment, the highest percentage as a part of the portfolio coming first and decreasing in that order. So first we have Nifty B. This is the Nifty 50 index ETF investment of around 46,000, and we are just at a break even here. And then we have the mid cap ETF, which grew up by 2% today. Mid cap has had a bigger rise, and with that, we are definitely in the positive territory here. So for a total investment of around 22,000, and then comes the small cap with an investment of almost 20,000, and that went up as well by a value of 2.4 percentage points today. And then come the large cap companies, State Bank of India and LIC Corporation of India, with individual investments of around 8.7 thousand and 7.6 thousand. So these have been in the positive territory as well today. That's why you see a bulk of the gains for today have come from. Moving on, we have Baltic Packaging, the small cap with the largest allocation of investments. So around 7,600. It's kind of flat on a relative basis. I will keep a watch on this as we go further. Then Reliance, and TCS and Tata Motors. The other three large cap companies, both from a value aspect as well as a blue chip aspect. TCS has been a little disappointing today. It's fallen down by about 1.5 percentage, and that's keeping in view the Fed outcome from the US overnight. And then we have small cap companies, GIC Housing Finance, Mopen Laboratories, and Sanvi Movers, and all of them have gone up handsomely, percentage and 3%. And we have the large cap banking sector stocks, Axis Bank and HDFC Bank, both from private sector. So 5,000 in Axis Bank and 3,300 in HDFC Bank are holding up today. And then more small cap companies, Uniparts and Tito Plastics. But if you see, I'm sequentially reducing the allocations towards the individual small cap companies. That's by design. Most of our allocations remain towards large caps and then the mid caps, and then sequentially the smallest allocations is towards the small cap. And because we have a good number of small cap companies, we're kind of averaging out the total investments. So the per company investment is rather on a lower side. Moving on, more of the small cap companies, Railtel, Tarachand, Bodal Chemicals, kind of all of them on the up move. Railtel hitting 5% and Bodal Chemicals going up by 7% today alone. And then we got the ITC brothers, ITC and ITC Hotels. ITC has seen a dip today of 1.5%, but ITC Hotels has seen an upside of 3.5%. So the stock kept falling, ITC Hotels, for a long time into sustained sell-off and reaped some gains today. Although I would have wished to have a larger position in ITC Hotels, at least from a short-term to mid-term trading basis, not on an investment basis. But it's fine. We'll look how the stock performs from here onwards, and should there be any downside, we'll take that opportunity to enter trades for a short-term to mid-term basis. And gold has seen a decent upside since we bought at its local minima. It's up by almost 2.5% from its recent lows. So overall, this is how our portfolio looks like. For all, we consider this could be just a relief rally and more of a technical move coming in today, because most of the stocks have been in an oversold territory for a long time. And that's where analysts caution that this market is not going to be a one-sided move, neither a sustained downside nor a sustained upside. It's going to be mostly a sideways market with a small bias on either side of up or down move. And for the next quarter or so, there could be a small bias towards the lower end, and we could see levels of 22,500, 22,000, or even 21,500 at the worst case estimates. But yeah, more or less that is what it's going to be. But we're not going to see a new high of 27,000 or something like that made out within this year. And few experts even believe that may not happen for the next few years as well, 2, 3 years, or even more than 3 years. We may not see a new high being made, in which case it's going to be range bound within 10 to 15 percentage from where we are today. So that's how it's not going to be like a sustained bull market running upside and giving you returns of 20%, 30% on a yearly basis. That may not happen. But still, we'll take this opportunity to watch out for dips in companies with good fundamentals, which are valued in a decent price range, and which have good growth prospects, positioned to do good in the coming future. And we'll think from a very very long-term perspective of 5 years or more than 5 years. So that's going to remain our plan, and we'll just see how the next few weeks or even months go by. And ultimately, what is our outlook for the long-term basis, right? This next 2 years or more than 2 years, what we next expect, what the market brings, and what the general perception is from the ordinary investors and the analysts alike. On a similar note, let us look at what our mutual fund portfolio looks like. This is the mix of mutual funds that we have been investing in on a regular basis, on a daily basis SIP. So we got value fund. Again, it's the investment of 45,000. We're at 43,500, or downside of 3% from the average. We have a blue chip fund against investment of 37,500. We're almost there. So we have just achieved a break even there. And similarly, with the mid cap fund against investment of 37,000, we are at 36,000 something, or close to 3% downside again. So which kind of means that 22,800, 22,900, when the Nifty index is around these levels, we're kind of at a break-even point with respect to both our direct stocks and mutual fund investments as well. But we expect more of this downside to come in the next few weeks or months from here onwards. And we hope we could build more of these positions into both the mutual funds and the direct equity space when that happens. For now, thanks for watching. Until next time, bye.